Thank you so much, Bernard. And after that nice introduction from Bernard, seeing that I'm speaking on access to finance, and I'm coming from the industry leader in digital solutions for SMEs, I think the next thing that I should ideally be saying is log on to ecobank.com, put in your unique code, the amount of funding you need, and it's in your account. But we are not there yet. We'll start off discussing this very important topic on access to sustainable finance. I particularly like that topic. I think technology would help me here. There are a few slides that I would share. When we talk about SME financing, there are a few things that I would like us to start off with, cover the grounds, set the context of what we are referring to as an SME, because it can be quite a broad definition. But we would lean on one of them from the IFC and look at basically three categories. SMEs can be anything from micro, the very small, maybe under 10 employees, $100,000 annual turnover, to the small, something between above 10 but under 50 employees, and about $3 million per year in turnover. And there are the mediums, the bigger end of it. Those would be anywhere up to about close to 250 employees and turnover of $15 million. So we can tell that there's quite a range. When we look at various references, it is clear that SMEs are very key for our economy here in Ghana, indeed globally. For example, some 85% of businesses in this country are SMEs. And we contribute some 70% to GDP. So clearly, those gathered in here representing our SMEs in Ghana are very key, very vital. But therein comes the challenge, a funding gap. This is referenced by the IFC, over $6 billion. When we bring that into Ghana cedis, it's a staggering $72 billion and growing year on year, is the gap that we need to fill. So we can understand why, if we want to grow from good to great, like this seminar is helping us, equipping us to do, funding is key. Now, the topic we are discussing is sustainable finance. So in preparing for this, I did some checks on sustainable. What does that mean? If we go into the root word, its origins from Latin and French, sustainable means being able to hold up, to give assistance to, continue without failing. So that's the kind of financing we are going to discuss. Financing that goes along with the SME throughout your life journey. Then it's really worthwhile. Now, that process, I think over the last few years, you would agree that we've seen so many reasons why sustainable finance is important, regardless of the size of SME that we are running. We've talked extensively about the impact of COVID. In Ecobank, I see daily our dear SME customers dealing with the impact and tail effects thereafter from COVID. We see that business has changed. Today, many of you, I'm sure, are having to market your businesses online, something that several years ago we could afford not to pay attention to. That has changed. Today, there is the need for you to scale up. So 2 days ago, Ecobank was represented here again, talking to SMEs like yourselves about expanding your markets beyond Ghana into Africa, intra-African trade. All these expanded markets are necessary for scaling up. I could go on and on, but the point is, sustainable financing is important. I think we can all agree on that. One aspect that I would mention is the collaboration that is required for us to achieve this. So, yes, I'm from a commercial bank, but there are a number of stakeholders. Let's just add to our context by touching on them. So, government is key. I think that earlier comments and Speaker, Madam, have shown that we need a stable environment in the economy. We need the right regulation, the policy framework that allows that compliance, which our CEO talked about. And government also often drives certain interventions that enable financing to work. Now, the banks or other financial institutions, we have a role to understand you, first of all, develop the right products that are targeted at SMEs, and equip you to access the funding. We'll delve a bit more into that. For SMEs too, you have a role being sure that you prepare your businesses well enough to be able to access funding and improve your awareness of what is available. In our chat this morning, I'd like to talk about primarily 6 aspects of funding, or 6 pillars, sources of funding. As we look at each of them, we'll try and make it a bit practical. Which types of SMEs does this work for example? So sustainable financing is only effective if it's targeted at the right SME type. Remember, we talked about the micro, the small, and the medium. So there's informal financing, where many businesses start from. For our SMEs in here, if we were able to ask for your experience, I'm sure many would share that they started off with help from family and friends. And we chose to highlight this because there's the risk of overlooking it as a very important source of funding, especially at the beginning, at startup stage. There's also that which is internal. That's the second one, internally generated funding, where SMEs recoup profit and put it back into your business. The advantage here is that any size of SME could use this, rely on this. But permit me to dwell a bit more on where I come from, debt financing, which is primarily from commercial banks and other non-bank financial institutions. This is the biggest or most widely accessed form of funding in our country. Anything from the short end all the way to term or longer term for equipment, business expansion, and so on. I'm aware that subsequent speakers and in our discussion time, we'll have the opportunity to discuss what will make it easier for you to get these. But I would like to say that within the institution I'm representing, within Ecobank, we have a dedicated commercial banking team which looks after SMEs. Very experienced and talented individuals who are willing and able to support your business. Related to that is the 4th area, closely linked to debt financing, but often not requiring what many of us don't like, collateral, in the sense that receivable or asset financing. So, for example, we have some SME customers who work for an institution like Vodafone. They maintain your cell sites. They are the bigger in the SME range, the mediums. These ones often would be able to obtain funding from a bank like us based on the contract that you have. So with that, we would not require structured securitization or collateral. Again, for cases where the SME is planned or structured well enough, we could have equity investors supporting with funding for the business. So people take a part of ownership or an interest in the business, but give money to enable you to work. So these 5 so far that we've mentioned is supposed to tease out or highlight the fact that there's a whole range of sources that can support SMEs when it comes to financing, to enable us think beyond the direct debt financing in banks. The 3rd pillar is one that I also like. We've chosen to call this developmental interventions, which will come from government and other agencies. What do we mean? These often take the form of grants. There are various entities, a lot of whom we in Ecobank partner, targeting support to sectors, perhaps women-led businesses, youth entrepreneurs, agriculture, for example. So how this works is that usually through a partner agency like us, you'd be able to obtain sometimes very low cost funding or grant funding, which is technically free. All you need to do is to be sure that your SME, your business, is clearly structured and representing the impact or communicating the impact that you will achieve once supported with funding. So our distinguished ladies and gentlemen and owners of business here represented, we would say that sustainable financing, as we've come to see, means financing that would work with us on our journey as SMEs. There are a number of available options, some which do not always come to mind. But it is most effective when it is the right financing for the stage of our business or for what we do. We know the expression, it fits like a glove. When a glove fits right, it's the right size for a hand, then it's effective. So let's recap. We've talked about micro businesses, the smaller, usually startup. We've seen that for these businesses, you can benefit from the informal, from family and friends, from internal funds, and a lot of developmental interventions go to the micro businesses, the smaller ones. For those somewhere in between, the SMEs that we have chosen the definition of small for, beyond what you generate internally, banks like us are available to fund. You can also obtain funding from potential investors, equity, and developmental institutions as well. As you get bigger, the medium-sized SMEs, these plus the receivable financing are available to you. My objective this morning was to share with you what we understand of sustainable financing, to explain that this is part of what is available both from the formal sector and non-formal, and to build on that initial discussion as we go into further engagements on the practical examples of how an institution like mine, Ecobank, has supported many SMEs in their journey and continue to do so. It is a delight to be here with you, and I really do look forward to fruitful deliberations as we go through the rest of the program. Thank you.